Hi, Michael.
Okay, I think that's working. Check. Hello, hello,
I can
hello.
hear you.
Yeah, cool, man. Um, okay. Um, so sorry, I was a minute late. Um, okay, so I have a few things that I wanted to talk about. Mainly, I think I want to explain something that with investing. And when I started out investing, I used to read a lot of Buffett's letters and follow the well-trodden path and this, that, the other. And I used to go through those letters, and he was saying stuff, for example, like it's better to have a bumpy 15 than a smooth 12. And I was like, yeah, that's common sense. Like, why would you even bring that up? And I read in one of his partnership letters, he describes that the distance in the investor's mind and the investor's stomach sometimes is very, very long. And I was like, okay, yeah, I've got it. I internalize that. I've got it. I've tried to visualize it. I tried to do my positive affirmations. I brought it into myself, made it my being. This is me, my journey. I get it. And when you start investing yourself, you're like, what you were saying there wasn't applicable to me. You're like, whatever. And you kind of uh, disregard all that. And now, I'm a bit older, obviously. I'm more experienced. I've been doing this for a while. Now I'm in the kind of a quote unquote mentorship position. And those things that I read about were so like crucial to become a better investor. And now that I'm a bit older and stuff like that, I've learned that those lessons are so important. And that's the secret sauce, is to understand that about performance being bumpy. And I've always said that, you know, I, I run a subscription service, so it doesn't matter my performance. It matters what everyone else's performance that are paying the subscription service. It's better that we're all just upfront and honest about what we're trying to do here. So it's more important to me that I take you on the journey rather than me compounding away. And I want, if you take nothing else from today, if you take just this one thing, this is what is the secret sauce of investing. So, a lot to do with investing is it echoes a lot that happens in the world. And the world is an organic system, right? It kind of grows and contracts and grows and contracts. It expands over time, but it's not in a straight line. There's a war, there's COVID, there's this, things happen in the world. But so it's not a straight line that things happen. Progress is not linear, right? The things accumulate, accumulate, accumulate. Then there's some kind of something happens that disrupts all that knowledge, and then we go for, let's say, a difficult period, and then it kind of builds up again. So investing is that basically. And what I want to explain to people is that if you in your mind think about the portfolio, let's say I always say, like, pick out five stocks in my portfolio, equally weight them. So that you don't know when you're making an investment what's going to work out. You can be Buffett, you can be Elon, you can be whoever the hell you want to be. You never know what's going to work out. It's complete uncertainty. But I try to explain that. And the way it works, I think in my mind, is like it's like kind of like a wave of something. So it's kind of like not so all the waves. If you if you look out to the ocean, all the waves look kind of similar. But when you actually in the sea, not all waves are the same. I don't know if anyone's ever done like kind of water sports or something, but you kind of like you position yourself here and the wave looks excellent, and then like that wave is not really working out. So then you have to move a little bit further afield to kind of try and get a slightly better wave. And then it works for a little while. And then that wave looked like it was going to have loads of power, but it just fizzled out. So it's the same with investing. You don't really know beforehand. But what is really important is to understand that it kind of those waves propel you, and you want to be, when there's a quote unquote risk appetite in the market, you want your portfolio to do well. And when there's a risk off period in the market, you want your portfolio not to give up all the gain that it's made. So you want to kind of go up, down a bit, up, down a bit, up, down a bit. It never goes in a straight line. And I try, if you get this, man, if you get this, like you've like this is it. Like it will make your life so much more at ease. And if your life is more at ease, you're more dispassionate about investing. You kind of take it more as a mechanical aspect. And if you're more dispassionate with time, when you get your success, you're going to become more confident to continue with the strategy. And as you become more confident, whilst being super disciplined to show up every day and work hard, if you are dispassionate, you grow your confidence and that drives your success. And it provided that you remain disciplined, you're going to get more success. But it's bumpy. Um, and I was underperforming in July and August, and I really had this hunger to turn the things around, but you know, it's bumpy. And I know the performance is really strong right now. And I really, I really want to give this to people. Don't expect the performance to always be strong every 90 days, but give, yourself a bit of peace knowing that over a 1 year period, you can grow your portfolio. You can, but people kind of get really nervous and they're like, oh, okay, like this doesn't resonate right now, but I'm just kind of recapping what I was kind of going through in 2024. I was like, okay, there are periods of times like 2 3 months where things are just not working, like the market is not performing well, and you have a lack of confidence in your process. So let's say, just to kind of make it slightly more simple, let's say I recommend a stock at 10 and it goes to, let's say, I recommended 10, it goes to 9.50, then 8.50, and you're like, this is not going to work for me, and blah, blah, blah. But it's only been like 30 days. And then, like, after, let's say, a quarter, it's back to about 11, and it's like, it kind of looks interesting, but you're not really that excited, not passionate about it. And you give it in a few more days, and it's like, oh my God, that thing's at 14. Oh God, it wasn't meant for me. It wasn't meant for me. Um, Now, the person that didn't try to be the smartest person in a room and just follow the strategy, they will capture the 30-40% gain on that stock. But the person that was trying to be like super smart and have all the answers and be super cynical and like it's difficult, it's really, really difficult to come out with a strong return over a 12-month period when you know it's investing is difficult. You do have to trust a bit the process whilst recognizing that things don't move in a straight line. That's really what I wanted to kind of talk about. um, I am very mindful that I could be like slightly wrong here, but I'm vaguely right. 2024 will probably be the S&P's second strongest year, like I think ever. Um, so if you know that 2024, like in a let's say 100-year period, was like exceptional, this like should in your mind think, oh, you know what, 2025 is not going to be exceptional. Now, nobody can track and tell you how things are going to be in 2025. Nobody. Now, what you need to understand is what I said here. Okay. So markets are like an organic organism, and the adversity of conditions where, stocks move around, that adversity weeds out quote unquote weak hands. And you need to have a plan in your mind of how to invest, when to buy, when to sell. So you have a plan. You try to stick to your plan. So one, have a plan. Two, stick to your plan. Three, go with it with open eyes so that you can adjust the plan. Okay? That's not disregard the plan. You adjust. You try and optimize. I've say this book from time to time. It's one of my the best investing books I've ever read. Super Forecasting. It's a very recent book by Philip Tetlock. Um, he talks about this idea of adjusting. That very few people can forecast more than 12 months out, but in a 12-month period, if you make slight adjustments, it massively improves your accuracy of the forecast. But just to summarize this, I am very determined to work really hard in 2025, but I want to get your expectations in the right measure. I've always said and I always maintain that a person should think about a 15% compounded annual growth rate over the course of the bull and the bear period, the boom and the bust. I also think that I'm older, than when I started this game. I'm much more experienced. So I don't want to promise the earth because I know that this is complete nonsense. But I'm also super passionate, and the passion and the experience with discipline will drive our performance in 2025. So that's all I wanted to say. I'm going to open it up if anyone wants to ask any questions. Yeah, and just if I just wanted to say thank you, everybody. I've really, been humbled a lot in 2024. People have said some really nice things to me, which I don't feel, if I'm honest about it, I don't think I deserve a lot of the things that people have said. It's not me trying to be humble or whatever. Like I'm not a humble person, but people have said a lot of really nice things to me, and I would like to say thank you very much. Um, I've been saying, like Georgia here, thanks for coming on. I've been saying the whole of 2024, when New Year's Eve comes around and you're around with your family, you're kind of celebrating and you're thinking about what you were going to do and what you're going to accomplish. I'd like to hope that, yeah, I delivered what I said I was going to do. I really worked hard and I really delivered. Um, and I'm very passionate about the work that is necessary in 2025 to continue to deliver for you, the subscriber. You know, I'm sorry for rattling on, but I've had some really nice, kind people say really nice things about me, and it kind of adds another layer of pressure to me that I feel like I've got to deliver for this group of people that they put their faith in me. Um, I I've got tears in my eye. You can't see that because of crappy camera. That's another very funny story actually. I paid £400, kind of same $400 for this laptop. in I think it was 2019. So I've had it 5 years, crap laptop. I have no software. I've never paid, I would never like pay for any software. Um, and people say, oh, you need a lot of screens and you need a lot of software to be like a great investor. It's complete nonsense, man. You don't need any of that stuff. All you need to understand is that, you know, it's not a straight line. Um, anyway, so thanks for the subscribers. Thanks for like the kind things that people said. I feel really damn determined to drive for you that performance. I promise you, man. I promise you. I will feel because I feel for myself that um I think I'm going to be okay in life. You know, my family's going to be okay. We're going to be okay. But I've met some really cool people along this journey, and I feel like, that I kind of owe it to people as well. Um, so yeah, um, thank you very much. Thanks for the nice message, Chris. Um, okay, I'm going to open it up to some questions if anyone wants to ask any questions.
Yeah, if I can go, it's actually my first time here. Michael. I'm based in Paris, and usually I'm in meetings all afternoon, right?
Okay,
Maybe Christmas period for once I have time to join and meet all the people
cool.
in real. So I joined in July. So I joined just before everything went down.
Mm,
I've been understanding, learning how you work. I've been super happy with Alab. Red. I call it. Recently, it's just been going up and up. I had a question around what's your position on swinging some of your stocks, right? Look at if you take GCT, right? That's the
mhm.
best example.
Yeah,
I have some.
yeah,
I
yeah,
could have made massive.
yeah, yeah,
When it was at 27, went down to
yeah,
20,
yeah,
I'm
yeah,
thinking, and I was hesitant, should I sell 20? But I was
mhm.
actually hoping it will go up
Yeah, yeah.
because, actually, one of the first stocks I bought from the portfolio was HIMS. And actually, HIMS,
Mhm,
because I was still learning how you work, I bought it, went 15%, said, oh my God, amazing. I sold, right?
mhm,
Then it went down, rebought, up again,
mhm,
resold. And I think I made a nice money out of it. So I was wondering, right? And I don't know,
mhm. Yeah,
I
yeah.
think it's an easy, but what's your position on that? Is that maybe something also for next year if it gets harder or not? Because from my
Mhm.
understanding, markets go up and down
Yeah, yeah,
constantly.
yeah,
And with
yeah,
swinging, sometimes you can make. So what's your position? Is that something
yeah.
you're
So,
thinking of or
yeah, I'm
yeah?
thinking very much about gig cloud technology, very, very actively thinking about it. So, I don't like to sell if, so I have an estimate of what the business could make in free cash flow. I've had this estimate for a long time with gig cloud, and I don't like to sell if the free cash flow is still going in the right direction. I don't like to sell because um, I, I have this quote that if you look to the market to give you a decision of where to go, you're going to follow the market and you're going to trail and underperform. So you need to have a clear vision. So I'm a free cash flow investor. People invest in different ways, but I'm a free cash flow investor. And so I don't want to exit if the free cash flow is tiling up. But I've said that, you know, I said at the beginning, you have to have a plan. So number one, you plan. Number two, you follow the plan. Number three, you have an open mind to adjust. So I've said to people that with Gear Cloud and with DraftKings, that I will wait until Q4 results come out. So they're smoke up. So they're right at the end of the earnings season, which is March. So for you, between now December to March, like can't live, can't breathe. Um, and but I'm going to wait until the earnings results to come out, and I will then adjust how to see how I see fit. I have no problems. Let's say hypothetically speaking, that uh, today gig cloud is at let's say 20, and then the Q4 results come out, and the results go like to 10. Oh my god! I don't have any problems then saying okay, I'm going to take a breather here because what I see and what the market sees are two different things. And I'm happy to take a breather and then, you know, step out for like 6 months and then come back and see how things are looking. But I don't like to sell just because the share price is acting in a certain way. I don't know if you read, but I wrote a few weeks ago because the same question came up a few weeks ago, and I gave the example of Money Lion. Money Lion, I recommended it at I think it was 19, it may have been. It went up to about 75. A lot of people bought it at 75. It went down to 35. So down like from 75 to 35. Like, oh my God, 55%. It was like, it was brutal. I couldn't breathe. It was crazy. Um, and I said, just hold, please, just hold. And most people don't hold because they don't listen to me. But I said, just wait a tiny bit. We'll get the end results. Even if it collapses further, at least you go with the certainty. And the results came out. It went to about 81 or so. I said, okay, let's call it a day. And then about 3 weeks or 4 weeks later, it now has been acquired. Um, I think 87 or something like that. Um, so between the period of, let's say, 7 days, more or less, Moneyline went up like 80%. So it compensated for all the other times that I was like, oh my God, what should I do with that investment? So the takeaway here is it's very, very important to wait, in my strategy, to wait to have the facts on the table. Have the facts, and then you can readjust. I have seen hated stocks, like HIMS, so I'll talk about HIMS. I've seen companies like HIMS where every single quarter the results were mind blowing to me. It was for 3 years. I recommended HIMS in 2021. For 3 years, I kept on saying buy this stock, and for 3 years this was a dog, a complete and utter dog. And then in a very short period of time, the stock just flew to the moon. But nothing substantially really changed that you could have told 3 years ago. Now, I have improved as an investor that I think myself, okay, it's okay to take a breather, step out, wait, reassess the plan. But I want to have the facts on the table so that when I make a clear decision, I am doing it with the facts on the table, not because I was anxious about something, but as well, what we're saying about equally weighting. You said yourself about, oh, A-Lab worked well, Gay Cloud looks like a dog. You never know. It's the same strategy that I'm following all the time, and you never know how things are going to develop. Like at the moment, it's like semis and AI once again seem to be picking up a lot of momentum, and it's to the moon, it's to the moon. Oh my God, let's go! But you don't know. Even if you look back, let's say, very short period of time, let's say 2 months ago, a lot of the semi names were kind of starting to moderate, and even a lot of people now are saying, "Oh, is Nvidia going to come down?" It's like up and so you never know how the market is going to react. You try your best to invest in companies that have a position that they can be economically viable in a relatively quick period of time. You try your best, but this is an art, and it's not like a science. It's not a real science to it. Um, yeah. So did that answer about Gear Cloud particularly? And I'm trying to think. So I prefer to just wait until the earnings. And I know it's difficult. Listen, I've been invested for a long time, and the most expensive thing that I can ask from another human investor is a bit of patience. But I know it sounds difficult, but 90 days, it's less than 90 days now. It's less because they reported in November, so in middle of December. It's less, it's not that long to wait. Obviously, it's Q4, so they got an extra few weeks at the end because the annual report. Um, but it's not long to wait. And if you, I don't know about you, but for me, the money that I'm making, it's worthwhile to be careful about it. Like, I've worked really, really hard to accumulate that money, and my wife's worked really, really hard to accumulate that money. So I don't want to just, have a strategy. I'm going to follow it. It's not perfect. I know that it's not perfect, but I feel like it's perfect enough so that I can stick with it.
Michael, so I feel a lot of your targets were like 12 months to 18 months, but recently, since September, we have been seeing that most of them have been achieved within three
Mhm.
months. So the percentage appreciation is enormous if you
Yes.
see. So I feel it's better to be a little bit grounded that if we say that anything more than 20% is a
Yeah,
really, really good icing on the cake. But
yeah,
if we achieve even 20 to 25%, that's actually pretty good.
yeah.
So I feel that's one aspect I wanted to communicate. The other one is more of a question.
Mhm.
Last evening, I heard Enovix CFO
Yeah,
was let go or left or
yeah,
whatever.
yeah.
Um, so for like you gave the example of hymns,
Mhm,
uh, where you said, hey,
mhm,
you had to wait like 3 years for it to skyrocket or something. For some like UEC,
mhm,
LAU,
mhm,
Enovix, you
mhm,
basically said, hey, I'm not going to sell it. It's just a buy and hold.
mhm.
When it skyrockets, it skyrockets. But right now, just hold on to it or, do whatever you need to do.
Yeah.
Um, so I don't know if the CFO was let go because of that whole liquidity comment in the earnings, and then later on just did a U-turn and they started raising capital.
No,
Um,
no. So, I'll, so just about NFX very quickly. Two things. Number one, when they wrote the Q3, when they released the Q3 report, I said right then, they're probably going to need to raise some capital. The share price was coming up on the back of the report. It's good management to try and raise capital when investor confidence is high. You have to raise when people are hot. You can't exactly time when people are going to be hot. So you need to be, as that's your part of your job. You need to be on the ball. If investor confidence is high, go. And if investor confidence is low, you don't go. So they probably didn't want to do it right then and then. But in hindsight, I have to clap them. They did a terrific job. It was a really, really good job that they did. Number one. Number two, yes, it sucks that the CFO went. I know that a lot of people haven't particularly liked this management team, and I understand why. Ultimately, the business has no real customer. It has no revenue, obviously, because it has no customer. Uh, so it's just a show. Okay. But when TJ Roberts came from Enphase, I was blown away. And I was like, okay, this guy clearly, because it's a solar panel company that he pretty much turned around from the brink of bankruptcy. I was like, okay, this guy clearly knows about energy, like because solar panels, energy conversion. This guy clearly knows about energy. Uh, Someone that has a lot of financial acumen and is willing to put capital, several $1 million on the line of his own money. So I was like, okay, I'm not that talented to be able to understand whether the business can take off or not, but I'm happy to side with this person here. So I don't know what the market cap is today. It's probably a billion, maybe a tiny bit less. Can't remember now. I'm like, okay, if I look at all these other SPACs that have nothing to them, like all these kind of quantum businesses, I'm like, okay, those are paying like you're paying, let's say 5-6 billion, and I can't imagine them growing actually any revenues anytime by like 2027. It's like more than like 2 years out. Whereas Venevix, I know because I've been tracking the story that they're going to have some revenues coming in at the back end of next year. So, and 2026 is going to just build very quickly. So I'm happy to hold that. I I understand that it's a Uranium Energy Corp and Centrus Energy and Enovix are kind of I'm going to have to wait for the market to be hotter. So I'm kind of those three positions. I'm going to just sit my hands. But going back to your original comment about having the right expectations, I think it's so like Chris. So I would not. I'm sorry to say, I would not even think about 25% next year. I would, I'm going to just be honest, man. Listen, the market has been really, really hot, and I will try my best, but I think you need to think about 15%. And I know it sucks to hear that, but I just want to like think about it right now because I just want to be honest with you. I don't want to promise the earth. The market's been really, really hot. Small caps, Trump rally, it's just a dance, and everyone's like, oh, singing and dancing. But I don't think that can be sustainable, 25%. And I even question 20%. But I promise you, Chris, I'm going to work freaking hard, man, and I will do my best. But I want to be realistic as well.
Thank you,
Hey,
Michael. That's all
hey,
the expectation is, actually. Nothing more than that.
hey, Michael, I have a quick question if you have time.
Yeah, got time for you, man.
Okay, I don't have my data in front of me. I'm at work right now. But if I remember correctly, on August 9, your article, you were stating that if a company does not well in two consecutive earnings,
Yeah.
in order to lock your lock DVR gain, you are not going to be in favor of that company.
Yeah.
So I wonder, like, and not recently, within the last couple of months, we've been talking about, like the uranium energy, LEU, NVX, Gigacola technology. Like I've been holding those stocks less than a year since I'm under your subscription for less than a year. But I bet you've been holding those for a while, and you explain your reasons, and you want us to to hold it and wait for it. But I wonder, like, are those stocks kind of exclusive of your strategy, or are you still behind your strategy for the August 9? If I understand you correctly, like for two consecutive
I'll answer
earnings.
those. Yeah, I'll answer very, very helpfully. Thank you for that question, Hachi. Really good question. It's a question people ask, and I really want to kind of just explain this. So I don't care too much about the share price. And I know I get my money comes from what the share price is going to be. So it's not fair to say I don't care about the share price, but if I have an expectation of GigaCloud or Uranium Energy Corp or whatever, and I can see that the path to the free cash flow is still progressing, I don't want to give up. Before you and I were talking about, just as an example, about UpLoving, you're like, oh, it's already so expensive, and why would you recommend it now? It's like, no, it's not expensive relative to the amount of free cash flow that they are making. It's expensive if you look at the share price, and then it kind of looks expensive. But don't worry about that. The share price, don't worry about it. Worry about the fundamentals. So the same about GigaCloud. From my perspective, they have not underperformed. And if I felt that they had, like I said with GitHub, I said, okay, it hasn't really developed how I felt it would. And I don't know if it was before your time. Match Group, PDD. I'd said, okay, it hasn't lined up with my fundamental expectations. I'm out. And Match Group actually didn't do much. It just kind of like stuck around $32, $33 like for the whole period, and didn't actually do anything. But fundamentally, I was like, okay, the fundamentals are not lining up. I'm out. So different people like different things in the market, and my strategy is not perfect, but I'm trying my best to follow the fundamentals. Namely, I've said before, I'm just trying my best to follow the free cash flow. And in my experience, if I'm right on the free cash flow, we make money. It's not perfect. It's not every time. That's why I always say equally weight them so that you're not attached to them. Because you never know how things are going to develop. You never know. Yeah. But
okay, thanks for clarification.
I understand that people are not happy with GigaCloud, and I understand that people are not happy with Central Energy. And I understand that. But equally
it's the fundamental. That was, because I was my initial understanding was the share price, but you made it clear. It's the fundamentally if the two consecutive, the earnings. Okay, I got it. Thank you. I appreciate that. Like nothing's in overall it's green, and we have some reds. That's okay. You cannot make 100% green everything, and I'm totally happy with the service so far. Thank you. I appreciate that, Michael.
Thank you very much, Hashi. Thank you.
Michael, one last question, just a one-word answer, hopefully. Do you use DCF method for calculating target price? How do you calculate the target price?
So what I've tried to do is go back to, let's say, Ben Graham's strategy, Benjamin Graham that taught Warren Buffett, and he used to use something called net nets, which is basically buying below the working capital, like how much money the company had. And that strategy was very successful for him, but he was just looking for 50% return and flip, 50% return and flip. So I've done the exact same thing, but I look at free cash flow. So I've just gone for 50% and flip, 50% and flip. Like Ben Graham's strategy, it doesn't work every time. And sometimes it doesn't work. So that's how I've tried to improve and adjust. That's what I was telling you before. Have a plan, follow the plan, adjust. So I'm always trying to become a better investor, and I've tried to do that.
Got it. Okay, thank you. You said net, right?
Yeah. So net is when you buy below working capital. It's yeah. So basically, it's just net, meaning subtract minus the working capital of the
Got it.
business.
Okay, thank you.
Tom, do you have a question you want to ask?
Yeah, just a comment. I want to say, I mean, how amazing you're doing as a job, right? Again, I don't know when I'm gonna do it next time, but I mean, since I started DVR and I'm talking to some really close friends, and I'm saying, hey, you know what? Look, it's working, right? I mean, actually, my goal was to pay my marriage next year with what gains from the market. I'm not that far, right? I mean, so I'm happy. And then they say, oh, tell me what you're buying. Help me. And I said, no, sorry, I'm not that guy, right? I mean, I admire what you're doing because you're, as you say several times, you're playing with people's money, and I don't want to take that risk for my friend
man,
because you said it. It's gonna go up, and everyone's happy, and it goes down, and they're gonna hate you, right?
They're gonna hate you, man. Like my wife always says, don't mix friendship and money, man. It's always a drama.
Exactly. So that's, again, I want to say again, I mean, how amazed I am by service, and now that I understand how you work, I mean, I stopped using stop losses. Right, I learned that
well
one.
Done, Dom. Well
right?
done. Well done.
And actually, the first time I bought things, they went down 10%. Said, "Oh my God, I'm bankrupt and everything." And now, you know what? Look at it. All right, let's sleep over it. Tomorrow's going to be another day, and that's okay.
Man. I always have this rule in my mind: when things are bloody, I give myself 30 days. I just say in 30 days, it's going to be a different story. Well done, Dom. Thank you so much. Thank you.
Oh, so thanks to you. Right? And again, while we're talking, again, my portfolio is down 2%, but again, it's going to go up and down and everything. And I learned from you. I mean, you know, just stay cool. Right? I mean, that's I think is the magic formula. Just don't look every day.
Yeah, definitely, man. Thank you so much. Okay, everyone. Thank you very much. Have a really nice day.
Thank you, Michael.
See you soon.
And question, how you say Feliz Natale or
Navid? Yeah, Feliz Natale. Yeah.
Right.
Thank you so much. Bye-bye, everyone.
Thank you. Bye.